Good morning everyone, welcome to Morning Markets on Friday the 7th of February. Today we'll be discussing Germany, and we touched on it yesterday in terms of factory orders being weaker than expected. Today we have seen German industrial production for the month of December coming in below expectations. This is one of the conundrums for the ECB and for the market to contend with. Why might that be the case? Well, Germany is one of the most exposed economies in Europe to the trade tensions that we saw through last year. Obviously, we've discussed the trade war and things have improved in that regard, but that still seems to be playing a part in the German economy at this point in time. Another issue has clearly been around the challenges of Europe. And what do I mean by that? Well, the German car industry is struggling with the changes to the emissions that have been coming in from the European government, and we've seen car production in Germany be exceptionally weak over 2019. That clearly has to be feeding into the industrial production numbers. So again, like we discussed over the past few days, we've seen some survey evidence that's improved, but the harder economic data that's been reported is still showing some of the challenges. So that's something that we'll continue to observe over the coming months. The other thing that we touched on earlier in the week was just the implications of the coronavirus in the global supply chains. And we've started to hear, as companies have been reporting their full year 2019 numbers, of some of these challenges for 2020. A good example is what we've heard from Burberry this morning, where they have had to close 24 of their 64 stores in China. And the most interesting statistic that I took away from their results this morning was the fact that those stores have remained open as sales have fallen between 70 and 80%. That gives you a real indication of what's happening on the ground in China, as we've seen the lockdown effectively of people travelling around. Another company that highlighted challenges in their supply chain was Hyundai, the South Korean motor manufacturer, where they've had to actually stop production at their domestic plants in Korea because they can't get some components for their systems. That shows you the challenges that this is causing when global supply chains are so integrated. On to the UK, we've had UK house price data this morning, which again speaks to some of the positive confidence that we've started to see in the UK market. House prices rising 4.1% year on year, ahead of expectations. So again, survey evidence speaking to a slight improvement in what's happening domestically in the UK as well. You'll be able to find more about this in our weekly blog, where we look at the dynamics of the UK and US housing market. That's all for today, all for this week. I hope you'll join us again next week. Thank you.